Thanks as always for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Lots of news and releases overnight. We start out with the Swiss National Bank leaving deposit interest rates unchanged at negative 0.75%, negative interest rates, and still stating that their currency is overvalued. So the expectation there is for further intervention. The next major release that came out was at 6 a.m. Chicago time, 7 a.m. Eastern, which was the Bank of England leaving interest rates unchanged at 0.25% as expected. And the assessment there is that the rates are still needing adjustment, so the market is anticipating further intervention. If November outlook broadly consistent with August, majority expect further rate cut is what they released. And then at 7:30 we got a slew of U.S. numbers, starting with advanced retail sales month on month came in at negative 0.3%, slightly worse than negative 0.1%. Retail sales ex autos month on month came in at negative 0.1% versus plus 0.2%. Then following that, the September Empire manufacturing came in at negative 2 versus negative 1, expected also slightly worse. That is a low tier number. And then we got initial claims, which is a mid tier number, came in better at 260,000 claims versus 265,000 expected. Continuing claims 2.14 million versus 2.15. Following that, we got the Q2 current account balance came in slightly better at negative 119.9 billion versus 121 billion expected. And then finally, we got the Philly Fed business outlook, which came in strong at 12.8 versus 1.0. The Philly Fed reading was the highest since 2015. Okay, since February 2015. That's what came online. That's what has occurred this morning. As far as other news, there's a hum about the fact that this is the 8th anniversary day of the Lehman Brothers crash. This day saw a 500-point fall in the S&P 500, a drop of 4.4%. Just a little bit of history. This day, 8 years ago, I traded for almost 36 hours straight, just straight through. And that was an incredibly interesting day with many days to follow as the market corrected following that major, in case you're in a bunker somewhere, a major brokerage firm, Lehman Brothers, went bankrupt, and another firm rushed to sell itself to avoid collapse. Bear Stearns. That's all the news there is. As far as what we're expecting, what's on deck for today, we're looking for industrial production and capacity utilization here in about 8 minutes. The industrial production number is expected at negative 0.2% for August. Cap utilization is expected at 75.7. We get business inventories at 9 Central, 10 Eastern. For July, the expectation is 0.1, and natty gas at 10:30 Eastern, 9:30 Central. And then in addition to that, we have Oracle after market today. Oracle's expected to announce, Oracle's expected to announce 58 cents per share on revenue of $8.7 billion. Again, Oracle, the creator of Java. So that's what's on deck. Let's take a look at what we expected yesterday versus what we got. This is from yesterday's Trader Bite. Thanks to all who attended. The primary hypothesis, given where we were, and this is a pre-recorded pre-recorded video of the Trader Bite. Unfortunately, by the time the market opened, it had already dropped. And I talked during this video, if you listen to it, about the overnight session compressing and the expectation for a break at some point around the open yesterday, and the break was lower, so it completely invalidated my hypo 1. Unfortunately, this is the problem with doing a pre-recording. It's best to do these at 9 Eastern, 8 Central, just a half hour before the open. For that reason, things can change quite dramatically. But the primary hypothesis, given the way we were set up yesterday, was for a drift down on the open, an open auction with a downward skew down to the point of control of the prior day of Tuesday, and the point of control of this entire um, composite range of 3 days. You can see that we have gapped down, we've left a gap up here, and we've been in balance for 3 days. And the expectation was this was a good base. So you look at this, and it's a fairly stocky base. The expectation was to drift downwards and tap on that, find a base of buyers, and then start shifting up. That did not work out at all. Secondary hypothesis is the opposite view. Test the overnight high early. The overnight high is right there at 2129.75, and then find sellers to push back to the point of control and then through. And yesterday, what it did was it pushed through by a tick. We had a one tick failed auction on the low, on the prior day's low. Here's what yesterday looked like. Hypo 2 was correct, but the extension did not happen. So here's the push higher yesterday, and then we chopped around and we started to drift down, and here's a one tick failed auction to the tick for a quick bounce back to the point of control, 2118.25, and then the market closed, the S&P closed on lows. I want to point out that the IB high was broken, the IB low was broken. We finished at the low. This is a neutral extreme day. This is what's called a neutral extreme day type. On a neutral extreme day type, we expect continuation. Essentially, a neutral extreme says, look, we've tested above the first hour's range, we've tested below the first hour's range, we've looked at both sides, and we closed on an extreme. So the expectation is the auction has tested higher, has tested lower, finished near lows. The expectation is for it to continue lower, and generally neutral extreme days mark tops and bottoms. Although this morning when I came in just now, the market was trading up here in the 28, 29 area, and is now back down to 2117. So when I saw that when I came in this morning, I thought, well, really canceled that neutral extreme, but it looks like it's back on. Let's look at the overnight session real quick. My goal here is to have a less than 17-minute video. So you could see a lot of volatility overnight. Opened, tested lower, drifted up through the European session, had an extension. So this is a pretty big rotation here, 15.5 points. Had an extension of 7.25, about a 50% extension there, and now going corrective. Chances are it's likely to pull back and then continue lower, is the way this is shaping up to be. Okay. So, wow, several people have corrected me. Yes, Oracle did not create Java. They own it. I know Sun Microsystems created it because I was dating someone who was part of the team that built it. But anyway, a lot of people got offended by that Oracle comment, I guess. So this channel here is broken lower on the overnight session, a very active overnight session. Of course, the volume, again, as I asked yesterday, is the result of not more activity really on the part of price drawing in volume, drawing in a third force from the sidelines to participate. The third force is being drawn in by the market naturally because it is expiration week and tomorrow is quad witching Friday. So if you look at a daily chart, you'll see that the bars for volume on a daily basis increase dramatically towards after rollover and into expiration, and this is part of the process. So it's hard for us to read this 283,000 this 283,000 as a more active participants. Um, and so there we go. That's what we have here. So um, pretty busy overnight session auctioned quite far on both ends. We did put in a lower low. We continued. We did ultimately ended up continuing this neutral extreme and pushing the low to 2107.75. 2100 even is now a magnet. And just a few nights ago, we got down to 2100 and a quarter. And so it looks to me like the bears are in control, and this is likely to continue its exploration lower, is what that looks like. I want to remind everyone for a minute here. Oh, that's odd. I want to remind everyone to walk through the market. Take the time. If you feel lost about what the market is doing, just do this. Pull in a small time frame, a short time frame chart, or do a replay and just run through and narrate what it's doing. There's the open, tested lower, initial swing high at 23 and a quarter. I selected that as the OS high yesterday, and then we ended up pulling to a higher low and pushing to 25.50 and then getting a fuller rotation down, so I shifted the OS high to the higher number 25.50. Here we're stuck in the opening swing. We finally break the opening swing. We're against the point of control. The opening swing gets pushed down, and then we cross it, we traverse it completely to push to this 2134.50. 2134.50 puts in a small double top right there and there, giving us what looks like a weak high, but the market is struggling to keep prices at higher, at keep the auction at higher prices, and then we get this impulsive rotation down. So up to this point, my expectation is for continuation higher. This was not a fun trade. And then the next expectation is, okay, I have confluence at mid VWAP and the opening swing high against the closing swing high from the prior day at 26 quarter. I'm expecting the mid here to hold at 26. If you're long 26, then you're looking for a scale out at about 28. Gives you the scale out and then fails back down and then starts to get choppy here at the mid. This tells us to keep our hands off once we close this trade. There's no direction at all to the market. And so here we break into the opening swing again. We cross the opening swing again to the other side. Sellers are in control, and we're looking for a pullback to around 24.25 for a short. Never get it. And then the market finally closes near lows. So as you run through this bar by bar, you start to get a feel for who's winning, what the auction is doing, simply by watching these rotations. What are these rotations doing? What are these rotations doing? What's the market trying to accomplish in its process? And what we had yesterday is a very, very open auction, trading both sides and testing both sides. Nothing really set up well yesterday, at least for me. And the market ended up closing near lows, and we ended up with a double-pronged, sort of a double-pronged profile, not exactly a double distribution profile, but one of those profiles that we've had here in the upper balance area, an F-shaped profile, if you will, where the market does not have any consensus on what to do. And so running through that, rerunning through that puts you in alignment, in better alignment with the market, in my opinion. Looks like my import did not work. All right. So, with that being said, the point of control remains at 21.18 and a quarter. It's actually shifted down now from 21.20 and a quarter. We've moved the point of control 2018 and a quarter. We're imbalanced for several days now. The way this is shaped, we have a push down, up, down, lower high, and we are near lows at this point. The expectation is for it to continue lower. We have a low volume zone here down to 2105. The expectation is that the market will likely push to 2100 and a quarter. This is what I'm expecting this morning. But before I do that, I want to give you a quick view of the weeklies. These are the weekly profiles. Here's where we've been stuck since the 12th, since really the 12th right here. We've been stuck in this big balance zone until this day, actually, including this day. And then we broke lower on Friday, and we've been in this range since Friday. These last 3 days we've spent down here, and so the market is keeping the value at the low end of this. So we've had our point of control for this entire balance zone way up there, and now the market is struggling to push back up and push value up, and is continuing to hold value near lows. And what that portends is further testing lower. What the market's not finding is buyers that are coming in and pushing value to where it belongs, where it belonged in the recent past, which is there and there. It's not able to do that. The expectation is now for it to extend down, and so what this profile will look like is something like that, where it's starting to balance out. And so this is what I'm expecting. This is the primary expectation. The key target below becomes this first price area is about 2096, and then the adjusted contract, the main target becomes 2072. 2072 becomes the key target to test below before balancing, and the 2072 area is the point of control of the last balance zone. That's how things are shaping up on the weekly. On the monthly, here's what we've done so far. We've moved from the upper distribution of balance down, and we have created a new balance zone, new acceptance, and a new value area below. The point of control has not shifted down yet for the month, but it's working its way in that direction to shift down to about 2121 or 2120, which is what we had yesterday. That's what it looks like it's likely to do, and the expectation is for this to extend down before the month's end. So the primary hypothesis for today: the market's currently trading below the point of control overnight, below the MC point of control. The expectations for responsive buying, I'm looking for a push up to 2120, a struggle here, and then a continuation down towards the MC LVN at 2105, and the key target today will be 2100. Remember, it's quad witching Friday tomorrow, so we have some delta hedging and some pegging going on. 2100 is a major strike, and that's likely to be in play. But the expectation is for the market to struggle to keep prices up, and I'm looking for sellers to step in. And there's a pretty good incentive for sellers to step in and push lower before buyers take over. The secondary expectation is for it to open, push lower below the MC, look to extend, and then find its buyers at the lower prices, and then basically chop its way back up. This is a much less likely scenario, yet it still is likely to play out. I'm looking for a large rotation up. For me to look at Hypo 2, I'm looking for a test down, and I'm looking for a large rotation up. Then I'm going to start stalking long positions against structure, maybe down here or something, a pullback down to here, would get me long looking for these tops and targeting 2118 and 2120. Those are the two key ideas for the day. I'll leave you with that. I want to remind you that today at 4:30 Eastern, we're having our monthly open AMA. You can submit your question to get registered. I would suggest you registered even just to get the recording. To get registered, just look for the link on this page in the description below the video, or if you're on the stage5trading.com TraderBite page just below this video, you'll see a link to register. Click on it, register, and you'll be included in the recording. Good luck today, and I'll catch you this afternoon. Take care.